Tax evasion is a serious crime, punishable by fines, back taxes, and potential jail time. But if you're guilty of bouncing a check to the IRS, you have options. Although a fine may be in your future, you can recover. Keep watching to find out how. Don't panic. The IRS won't come knocking on your door the minute your check bounces, but they will expect you to make good on your payment. The IRS's first course of action is to send you a letter via postal mail. This is known as a Letter 608C, dishonored check penalty. Your bank will also notify you as they would with any bounce check. Most banks charge a nominal penalty fee for bouncing a check. The IRS will tack on a penalty as well. Once you realize your check to the IRS bounced, you can decide how to handle it. Understanding the penalties. Bouncing a check is inconvenient and embarrassing, but it's not the end of the world. You will, however, incur penalty fees from both the IRS and your bank. Here's what to expect. Bank penalty fees. Every bank handles bounce checks and insufficient funds differently. Unfortunately, you get fined even if you're on the receiving end of a bounce check. If you write a bad check to the IRS, you can expect a bank penalty fee of between $27 and $35. The recipient of the check can also charge your bank a fee ranging from $20 to $40 or a certain percentage of the check amount. In the event that you receive a bounce check, you not only owe your bank the return check fee, but you're now faced with the task of recovering the money you're owed. IRS penalty fees. For checks up to $1,249.99, the fee is $25 or the amount of the check, whichever is smaller. For all checks more than $1,250, the penalty fee is 2% of the check amount. Be honest. The worst thing you can do is lie to the IRS about your situation. In most cases, a letter detailing your reason for either bouncing a check, being late on your taxes, or not paying enough up front will convince the IRS to reduce penalties and interest. You're asking for an abatement for your taxes, so be sure to use this phrase in your letter. The IRS is also forgiving if you unknowingly underpay. If you based your tax payments this year on previous years but end up owing more, the IRS won't charge you a penalty as long as you pay by April 15th. Payment plan. Despite popular belief, the IRS is a relatively reasonable organization. As long as you don't try to dupe them, they'll help you make good on what you owe. Ideally, paying owed money to the IRS by April 15th is the way to go. This way you avoid all late fees and interest. But if you can't make that happen, a payment plan is a viable option. A short-term payment plan doesn't incur any fees unless you use a credit card. By using this payment plan option, you're agreeing to pay the full amount owed within 120 days. A long-term payment plan costs a $31 setup fee online and a $107 setup fee for phone, mail, or in person. A long-term payment plan that includes monthly installments costs $149 online and $225 through other means. There are also low-income payment options available. While bouncing a check is less than ideal, it's not a tragedy. As long as you make good on what you owe, the IRS will work with you. Are you worried about unfiled tax returns, or did you accidentally make a mistake on your tax return? We're here to help. Contact us 24 hours a day for legal tax advice and answers to your most pressing IRS questions. Thanks for watching. If you enjoyed this video, be sure to like, comment, and subscribe.